So the big mover today in the currency world is the pound, and it's this GDP data that's coming below markets expectations and in line with the minimum expectations. See the month on month, minus 0.3% in line with the minimum expected. The year on year, 0.9% in line with the minimum expected. So that's weak reading. And when you tie that into the non-farm payrolls for the UK, and we saw that big dip in hiring, and that's because it's been more expensive for UK businesses with the increase in national insurance and the higher taxation on companies. All of that has just made very difficult.
We're around 10 minutes now to the bottom of the hour. We are due to get the US PPI data and weekly initial and continuing jobless claims.
So that extra shove lower in the pound is just increasing the expectations that the Bank of England have to start moving to interest rate cuts now. Now, if you remember, that weak labour data gave us that euro-pound buy bias, and you can see that's almost hit target. So first of all, we looked at longs yesterday on the 15-minute chart. We saw this nice flag pattern, and you can just see here, right? So remember how we were looking at, this is the way you do a flag. That's the flagpole. Then we had the pullback on the flag structure, okay, and then we had the breakout almost instantly on balance volume staying higher, price moving higher, on balance volume moving higher, and then the entry was on the breakout of that trend line, stopped the other side of the structure, and the idea was for price to move towards target, and you can see that target is hit on that weak GDP data early this morning, right? So nice trade for those who are in that, and good risk reward, 3-to-1 risk to reward. Lovely. That's the nice thing about the flag patterns. You have that really minimal risk to reward. So very nice trade. And we also mentioned the head and shoulders pattern that was taking place on the daily chart. Okay. So I want to show you something here. Little technical tip. Left shoulder, right shoulder, neckline. See the head and shoulders pattern? Now these head and shoulders patterns, they are slightly better, slightly more reliable when you've got the neckline tilting down, right? You see that's where it's tilting from left to right. That makes it slightly more reliable. And then you see how this shoulder here is slightly higher than that shoulder? And notice on rising volume, right? So the on balance volumes turn positive. That shoulder is slightly higher than this shoulder. And then you get the breakout on volume, and the target is, you go for the head, right? And the target is the height of the pattern. So the target is from here up to 0.8550, right? So you're pretty much there hitting target, right? So if you're long euro pound, you can take profit on that, absolutely fine. You're pretty much there. So very nice trade. And the macro fundamental outlook for that was just that the ECB, they don't need to cut interest rates anymore. Bank of England's still up at 4+%. And now you've got jobs weakening, you've got GDP weakening. What have they got to do? They've got to cut rates. So euro pound upside makes sense. Of course, this wasn't hurt with a weak dollar either. And that was on the CPI yesterday. So that's euro pound update.